Right. Hey, everyone.
Hey,
Just good to see your faces here. Hang on just a second and we're going to get started. All right. Well, hi, everyone. For those of you joining live in the Zoom room with us, we're thrilled to see you here. As you all know me, but for anybody on Facebook who might be watching live, I'm Annie Dickerson here with our fantastic RIA team, Quentin Briantis, our RIA manager, and Dee Campbell, our marketing coordinator. Hey, guys.
hey, Annie.
Hi, good
Happy
morning.
Wednesday.
Yes, indeed. Well, we're thrilled because this is the first actual real live where we've had a live audience. And so we're thrilled about this. Thank you so much for joining us live here today. So what we're going to do today is we're going to take some time to dive into our topic today, which is a really good one, how to actually make some money raising capital. And so we're going to talk about how to get to your first 100K raising capital. And Quentin's going to lead us through that. And we've got some really good information and actual scenarios and numbers for you. So we'll focus the core of the conversation on that. But as you guys come up with questions or comments, feel free to use the chat. Or for those of you watching live on Facebook, feel free to use the comment section there. And just chime in. And so, especially since we've got a small, intimate group, we can keep this fairly casual. So definitely chime in with your questions. And then, of course, we'll leave time at the end for questions as well. All right. So without further ado, I'm going to turn it over to Quentin to get us started. Quentin, go for it.
Awesome. Thanks, Annie. If you could just enable screen sharing and
Oh,
then we
yes.
can get rocking and rolling.
Go for it.
All right. So I'm super excited by this topic today, how to make your first 100K raising capital. I know this is a big question that we get with a lot of people within RIA, interested in RIA and everything. So just to give a little background on the Real Estate Accelerator program. So we help real estate syndicators to build out their brands and automations and backend to really be able to scale their business and do more deals. So over the last couple of years, our group itself has raised over $140 million in capital raised to go on to do their own deals, which
Can
is
you
a
believe that?
crazy big
I,
number. Yeah,
I was gonna say, and that includes all of you here on the call here. You're a part of that.
yeah.
That is incredible. I mean, to be raising capital alone, you feel like you're on an island, but to be part of this community, that is an incredible amount, not only of capital, I see that as impact. Think of all the lives that are touched through that 140 million that has been raised. So absolutely
Yeah.
incredible.
Yes, very much. And to that, we've seen over 30 plus partnerships formed within the real estate accelerator community. Again, love being able to see people within our group really networking, building those relationships together and going on and really going out into the real estate world and taking those partnerships to the next level. And then also with that, we've helped launch 35 new syndication brands. So these are people that just wanted to get started and are now off and running and growing their own businesses in the capital raising space, which is super exciting. So some highlights from a couple of our RIA members: they successfully raised $2 million on their first syndication deal. Another one has doubled their capital raising capacity since joining the Real Estate Accelerator program. Another has done $3 million on their first syndication deal. Crazy good numbers for a lot of people starting out. And then a recent one, my team and I raised $40 million over the last 3 years. Thank you, Annie and Julie. So pretty amazing things going on within our community here. A lot of movers and shakers in the space, and so excited to continue seeing where everyone in our real estate accelerator community go. All right, so let's talk about you first. So I'm sure a lot of you guys, especially in the Facebook Live group over there, are kind of sitting at this place and where you're at right now. A lot of people that come into the Real Estate Accelerator community are, maybe you're a busy professional, you're a doctor and you've invested passively in syndications for a little bit, and are looking to go over here on where you want to be and take a more active role, maybe build up another income stream outside of that. Maybe you're also building a small portfolio of rental properties, single families, small duplexes, and you're looking to scale that up into the multifamily space, 50 plus, 100 plus, 200 unit plus multifamily apartments. See a lot of that coming our way as well. And then maybe you've already built a really solid real estate portfolio, but you're tapped out of capital. You have all this deal flow coming in, and you just got to say no. And you're looking for more capital to be able to take on all these other projects. So that's where we want to come in with you through the Real Estate Accelerator and help get you to where you want to be. All right, so let's dive into our topic today. So how capital raisers make money. So before we dive into how you can earn your first 100K, let's just start out from like a very high level, the different ways capital raisers can make money. So first off, starting with the fee side. So there's a whole bunch of fees. This is just a short list. Some common ones you're going to see are acquisition fees. These are based off the amount of capital raised when you're closed on a deal. There's ongoing asset management fees. If you are a part of the asset management team, as far as executing the business plan, you can get a percentage there. Construction fees, again, if you have a heavy value add project, let's say repositioning a C class into a B, there's going to be a heavy lift there and a lot of construction, and you want to get compensated for that. Refinance fees, if a couple of years into the deal you're looking to refinance, you can get a fee there. And then at disposition, so when you go to sell the property and get a fee there for all the transaction and paperwork on that end. Again, this is just a short list. There's other fees that you can also stack on in this. But that's on the fee side of things. So moving over to the equity side of things is where the percent ownership that you have within each property or deal that you're doing. So typically for capital raisers who sit over here on this GP side, that's the general partnership, typically you see a 70-30 split between the general partners and then the LPs or the limited partners. So those are all the passive investors that you're going to be raising capital from. A lot of this equity is realized when you go to sell the property at the end. So typically this is anywhere with 3 to 5 years, depending on kind of the strategy or business plan that you're executing on for each individual deal. And then for our purposes today, we're going to be looking primarily, at the acquisition fee. We're going to be looking at the acquisition fees over here. So the reason why we look at acquisition fees is this is the cash that you're getting up front when you're closing on a deal. Typically, they range anywhere to 1 to 3%, depending on the deal and how things are structured. But especially when you're just getting started out in raising capital, this is going to be where your cash flow is coming from to operate your business and kind of continue your operations from there. So as far as how we're looking at how you can back into that 100K, hitting that 100K mark, this is what we're primarily going to be focusing on.
And this is such a good point, especially early on in the business. I mean, Julie and I would always, early on when we were raising just a few 100K or $1 million per deal, we were talking about the acquisition fees only because they were right, they were that cash flow, Quentin, to your point. And that's what you need to keep the business alive in those early days. We were never talking about the disposition fees. That's many years, potentially many years down the road, if ever. I mean, if everything went south, we may never get the disposition fees, or it may be a fraction of what we had thought. So the acquisition fees is what's here live today, and that cash flow, which is why we're focusing on it here.
Yeah, exactly. So let's start with the end in mind here. So down at the bottom, total earnings, we're looking to hit that 100K number right here. So typically we see two different types of people that come into the syndication space. One that are owner operators. So not only are they raising capital for their deals, they're executing on the business plan, they're managing the property, asset management, property management, seeing the deal all the way through from start to finish. So that is one section we're going to be looking at. And then there's just the capital raiser over here. So these guys are primarily just bringing capital from their investors into the deal. They're usually partnering with other general partnerships on the GP team as well. So starting with this 100,000 in mind that we're all looking to get to, if we're looking at a target raise amount is what we're going to be looking for in order to get to that 100K number here. So to break that down for an owner operator, if you were to raise $5 million right here, and then you received a 2% acquisition fee for that $5 million, that puts you right at that 100K mark right there in earnings up front. If we're looking over onto the capital raiser side of things, where you're primarily pooling that capital, it's a little bit different here. So the target raise amount would be $10 million is what you're looking to raise at a 2% acquisition fee. Because you're not owner operating the deal, there's generally some sort of split between that acquisition fee. So for simple sake, we just put it at 50%, where you would get 50% of that 2% acquisition fee, again, getting you to that 100K number. So as we kind of move through a couple different scenarios in the upcoming slides, this $5 million and $10 million is what we're going to be really looking at, and how we can back into those to get you to your first 100K. All right, so scenario one, and we're going to be looking at list conversions here. So a couple of assumptions that I just wanted to talk through really quickly. If you come in with about 200 potential investors on your list, is kind of what we're going to assume for this exercise. And we're going to put in a 5% conversion rate. So obviously that puts you at 10 investors right here that you would be that are actual investors in putting capital into your guys' deals. So if we assumed a $50,000 average investment, which is a typical minimum for a lot of syndication deals in the space, that puts you at about $500,000 per raise, both on the capital raiser and owner operator side right here. So if you were to try to get to, again, to that $5 million, $10 million number right here, owner operator would need to do 10 deals per year and a capital raiser at 20. So that's a lot of deals to be handling in a year. I know, Annie, way back when, I think, how many did we do back in the day in 1 year?
We did about 10 in a year.
Yeah.
Yeah, but there's a lot there's a lot in here, that a lot of assumptions that we're making in here. So we're going to talk about how, as we tweak these numbers, or if you have more investors or a higher conversion rate, or their average investment is higher, these numbers can change drastically. So this is just a baseline. But yeah, 20 deals, ouch, that would be a busy year, a very busy year.
For sure. All right, and now let's move over to scenario two. So again, we're going to be looking at a 10% conversion rate. So we're going to double from that 5% what you were able to convert of your 200 investor list. So that puts you at 20 investors investing 50K, putting you at about $1 million per deal that you're able to raise for. So in this scenario, owner operator would be over here at 5 deals per year to get to that $5 million number. Again, 100K in acquisition fees in your pocket, cha-ching. And then on the capital raiser side of things, that puts you at 10 deals at the $10 million mark, again, getting you to that 100K number. So again, 10 deals, like Annie was saying, is definitely a lot, but this is kind of gets to a little bit more of a digestible area as far as actually being able to do something like this.
And I just want to add in here this conversion rate, right? Like, we jumped from 5% to 10%. That's not a lot of people. That's going from 10 people in the first scenario to 20 people. And so you can do that through maintaining your current list and just figuring out new ways to hook them and get them in and engage them and get them over the hump so they actually take action. Or you can think about maintaining that 5% conversion rate, but expanding the size of your list, which is a lot of the marketing techniques that we talk about. So there's sort of 2 ways to go about it: is increasing that size of the overall list, which Quentin's going to talk about as well, or, increasing that conversion rate. And those marketing techniques, those communications, that trust that you built, all of that is going to be critical to getting to those conversion rates or the list size that you need to back into these numbers.
Yeah, exactly. Ton of levers you can definitely pull in each of their scenarios. So finally, we can just go through this quickly. 25%, so a quarter of your investor list turn into investors. That takes you from 20 in the last example up to 50 investors in this situation. In this instance, owner operators will be looking at 2 deals per year to get to that 100K mark, and then capital raisers over here at 4. So these numbers, once you're able to really build those relationships, establish those connections, and really get that loyalty with your syndication business, is where you really get to see the power of getting to that first 100K mark right there.
And I will say that these numbers, I mean, so I would urge all of you to take a look at your numbers. If you don't know your conversion rates right now, definitely take a step back and look at your overall numbers, because this is super valuable to know. What is the total number of people in your list? Then of those, how many people have applied for your investor club? Those are essentially the potential investors, right? And then of those, how many people are actually converting into deals, or giving you soft commits, or actually funding? Or if you haven't done a deal yet, maybe put out a sample deal and see how many people express interest in that. But then you have this baseline conversion rate. And with that, then you can start to calculate, okay, here's where I currently am. Here's my raise capacity at present. And that would equate to roughly this much in income for the business. And if I were to increase that conversion rate, or if I were to increase the total number of investors, here's the impact to the bottom line. So I highly recommend, this was something that we did off and on, but now we've got it locked down tight, is really know your numbers, because you can't grow what you're not measuring. So definitely take a look at what's that total list size that you have. Of those, how many of those have converted into investor club members? And of those investor club members, how many people have converted into actual investors? And that'll give you a good baseline as to where you are.
Yes, exactly. And just to that point, conversion numbers are great, but what does these actually mean? How do you actually get there? What are the things that you can do to really drive that? And this is where we really focus on in the real estate accelerator, is not just looking at numbers and tweaking percentage points and seeing people how go through a funnel, but really the more, how do we establish trust and really build those relationships with these investors? So what things that are questions that I challenge you to think about if you're just starting out your real estate syndication business is, who is the type of investor you're looking to help? Are you looking to help doctors? Are you looking to help tech employees based in San Francisco? Are you looking to help business owners who are exiting their businesses and looking for their next project? So always thinking about, who is this investor avatar? Where do they live? How old are they? What do they think about when they're thinking about their finances, and how can you help them through your real estate investments, and getting really laser focused on who that investor avatar is?
And I'll add to that, and this is a conversation we're having internally with our team as well, because you might start out with, this is my ideal investor avatar, and you go out and all your marketing is directed toward that person. But then over time, as you evolve, as your business evolves, that person may grow and evolve and change as well. So there's that. And there's also the actual people that you're talking to on the phone. So it's super important to reconcile those two. So for example, like you all know, our target audience are moms, working moms, looking to build passive income for their families. And while we have attracted a certain subset of those, we've also attracted some retirees and some tech employees looking to build a second stream of income. So we're talking internally about, okay, how do we then adjust our marketing to reach not just the original people we set out to help, but also to incorporate this secondary avatar and tertiary avatar, so that we can actually reach the people who are actually making it through the funnel to us.
Yeah, exactly. And to that point lands our second question. How does your brand attract that ideal avatar? Going back to all the marketing pieces, what is the language that you're using? What are the pain points you're addressing in a lot of your communications? How are you talking about these with these investors? These are all very like micro shifts and how you're talking and presenting your brand to your investors that really help build trust and, again, kind of further those relationships over time. And with that, taking us to our third question, how are you educating and building relationships with these investors? So this is not someone joins your investor club and they're giving you a check for $50,000. You're building these relationships over time through various methods of ways to communicating with them. You might be doing email communications. You might have email drip campaigns, educating them on what syndications are and the assets you're looking to invest in. You might be doing personal phone calls out to each of your investors or a select few of investors to really deepen and strengthen those relationships, knowing that you're their point of contact or their go-to person for their investments. Other things that we help coach people through in the Real Estate Accelerator: are you doing dinners with your investors? Are you getting referrals through them? And how can you just continue to really build and stack on the relationships that you have with your investors, and then strengthen those over time? But yeah, so those are some of the high level things that we definitely help with through the Real Estate Accelerator course. Obviously, Annie and I could probably go at length with a lot of these things and probably have full on conversations about this in later real lives. So if there are any questions here, things that are coming up for you, definitely let us know in the comments if there are any topics or things that you want us to cover in the future. But with that, for anyone that does want to look into taking the next steps and maybe start looking into whether syndications or raising capital is a good fit for you, go visit us at therealestateaccelerator.com, submit your application, talk with our team. We'd be happy to kind of see where you're at now and how we can help get you to where you want to go. So with that, would love to open it up to questions for anyone. I don't know if we have any in the chats that we can help talk with, or if anyone that is here live wants to come off of mute and ask any questions as well.
Anyone? And it doesn't have to be related to the topic today. If you have another question, a burning question related to some other aspect of your business, we can absolutely dive in there as well. All right, going once. Going twice.
Annie
All right,
and I are
Quentin.
notorious for awkward silences.
We are. We can wait here all day. But Quentin, I was going to ask, you know, related to conversion rates. I mean, as you're working with various folks in the RIA community, do you find where do you find that they often get stuck? Do they get stuck, or do they focus on sort of building their overall list? Are a lot of them sort of focused on the conversion rate? Are they stuck on, you know, not getting enough leads in? Or what do you see as some of the common challenges that people are seeing as it relates to, you know, getting people in that pipeline?
Yeah, so I would say first is just the consistency piece of building those relationships over time. So again, it takes a lot of work and time to really foster those relationships, whether it's newsletters that you're sending out, whether it's webinars, whether it's direct phone calls out. But getting that consistency and always staying top of mind with your investor list is one thing that we see a lot of opportunity for people to build that consistency into your business. It's not just finding the great deals that you're seeing out in the marketplace. It's also taking care of your investor list. These are people, they're emotional. They think about things. They want to know who you are. They want to talk to you. They want to hear from you. So always having that point of contact and openness to be that figurehead. They want you to guide them through this process. They're looking for that. So show up for them in a way that you can be that for them. So that would be one thing, is definitely the consistency piece. And then as far as lead generation and getting that top of funnel and new leads coming in, don't be scared to get in front of a lot of people. It takes a lot to go from kind of a solopreneur, maybe you're used to just being in a W-2, to being in front of many people talking about this thing that you're so passionate about. But if you're able to get over that hump and really just be like, hey, this is who I am, this is how I want to help you, um, is really going to help drive that top of funnel and getting new investors in. So that could look like being on a webinar, like this one. It could be going on podcasts. It could be attending meetups. It could be, again, hosting dinners with friends and friends of their friends. That might be good fits for your investors. So just don't be scared. People, again, you're the guide. People want to hear from you. And once you know who you're looking to help, they're going to come to you.
And I would add to that, as you're looking at a lot of people, they focus on the top of the funnel, right? How do I get more people into the list? And they have this like sense of comfort, right? When you see, 10 people signed up for my lead magnet this week. Oh, I feel really good about that, right? But then you have to step back and think, okay, well, did they actually then take action to sign up for the investor club? Do those people actually go through and put in a soft commit or sign a PPM or fund or actually get into a deal? Or are those 10 people that are going to sit there on your list for months and months and not take action? And so this is something that we've done internally recently as well, is do a real audit of our full funnel. How many people are there at the top of the funnel? How many people have taken action so to get to the next stage? And then what we're doing is we're actually working from bottom up. So rather than focus on getting more people in the top of the funnel, we're saying, okay, how can we fix things at the bottom of the funnel, make sure everything is as optimized as possible? So if those people get here, rather than, let's say, 5% of people, we're converting 20% of people who get to this stage. Okay, great. Now we've fixed that stage. Let's move up. Because if you work top down, there's all these people falling out of your funnel that you're paying for those extra people on your list, and you're creating this big list, but it's not contributing to your bottom line. The warmest leads are those people who are already in your funnel. And so if you can figure out a way to move them, even to the point like our team, we're pounding the phones right now, calling every single person on our investor club list who is not yet invested. And that's hundreds and hundreds of people. And so getting down to brass tacks and really figuring out, okay, this warmest group of leads, these people already in your funnel, forget the people who are out there cold in social media or on Google. Forget those people right now. Focus on the people who are already in your sphere, who have already raised their hand to say they're interested. Who are those people who have signed up but not taken action? That's your low-hanging fruit, and that's how you're going to get to these conversion rates, and that's how you're going to get to that 100K or more. All right. So with that, if there are no other questions, Quentin, tell them about these ongoing sessions and what they can expect next.
Yes, so we're going to be hosting these RIA lives every other week. So we'll be back here same time, not next Wednesday, but the weekend after. And we'll be doing various topics on capital raising. So if there's anything that we didn't cover or that you're looking to cover, definitely shoot us a note. We have our email, ria@goodegginvestments.com. If you do come up with any questions after we end the session today, feel free to shoot us a call, text, email at the information below. Happy to help out there. And yeah, we'll see you back here, same time, same day in 2 weeks.
All right. Thanks, everyone.
Thanks, everyone. Bye.